If you're stacking silver and you understand the reason that you want to be heavier in silver, much heavier in silver now, is because of the ratio. At 80 to 1, man's ratio is 80 to 1. It takes 80 ounces of silver to buy 1 ounce of gold. Comes out of the ground at 10 to 1, simply because of the transport costs and logistics. So silver was discounted from the natural ratio of 10 to 1. But 80 to 1 is stupid. If it comes down to 40 to 1, what that means basically is that it has outperformed gold 2 to 1. So if you think that gold, and you think rightly that gold is going to hold its purchasing power for you, silver is going to even do better than that.
Is on the wall. Gold and silver are replacing many traditional assets along with other commodities too. As Zoltan Pozar says, this is about real commodities, no longer promises from countries that are bankrupt morally, socially, and actually. And I think that portrays for much higher prices in gold and silver, even than Bank of America or JP Morgan optimistically are telling us.
Gold will continue to appear to rise, but actually what's happening is that its fiat currency is falling. But there is another element to this now, and that is that I think the understanding of this is going to widen, and particularly amongst Chinese savers.
In today's weekly recap, 3 financial experts, Andy Schectman, Bill Holter, and Alasdair Macleod, discuss the current situation for gold and silver and share their insights on the recent macroeconomic developments to help you navigate the precious metals markets. In this episode, we bring you the best clips of the latest week as we've watched hours of footage so you don't have to. Make sure you like the video, subscribe to the channel, and turn on notifications so you do not miss out our recaps. Enjoy the episode.
I think you're already starting to see that. That's why Shanghai prices are $30, $40 higher on gold and $3 to $4 higher on silver. You're already seeing the cash markets, the jaws are starting to open between the cash markets and the paper markets. And what's happening is you're having buying on LBMA, buying on COMEX, getting metal delivered out, and it's being shipped to Shanghai. It's an arbitrage. So I think you're already seeing that, and going one step further, and this is the big step. There's questioning now of the amount of gold held by China. I think they say they own like 2,700 tons or 2,900 tons or something like that. And I'm going to say it was like 5 or 6 years ago, on the back of a napkin between what had been, first off, remember that almost nothing gets exported. There's no gold that gets exported from China. They have production of roughly 400 tons per year. And if you look at the Shanghai imports, I mean, those have been, sky high, 1,000, 2,000 tons per year. So even if you look at just the 400 tons per year that is produced within China, I mean, over 10 years, that's 4,000 tons. And they've been doing this now since, there's been a concerted effort to produce gold in China since the early 2000s. So, is it 6,000, 8,000? I mean, on the back of it, I could have shown you where China had 25,000 tons already. So, I mean, they're probably 30, 35, 40,000 tons at this point. Once the BRICS currency does get released, and they have said that gold is going to be one of the components that backs the currency. Now, one of the questions is how much, how big of a percentage? Is it 20%? Is it 40%? I don't think it'll be more than 40%. But then you got to do the math. Because if the BRICS currency is what settles trade worldwide, there's got to be a lot of currency. And that means there's got to be either a lot of gold, or the price of gold has got to be a lot higher for the gold that's actually backing the currency. So long story short, I do think that for their own benefit, if you're sitting on 30, 40,000 tons of gold, wouldn't you want to revalue that higher at some point? So yeah, I think absolutely China is in their best interest going to revalue gold higher. And one of the things that does is it makes it really hard for anyone to catch up to their hoard because it's so costly to purchase each ounce. So, I mean, if they revalued it to pick a number, 10,000, 20,000, 50,000, whatever, it would make it really difficult for nations that didn't have gold but want gold to catch up in the game.
Now, after listening to Bill Holter's point, let's see what Schectman has to say into this matter. Will the BRICS currency destroy the U.S. financial system? Post in the comments section your thoughts, and let's get back into the episode.
I think, yeah, ultimately, those are numbers that I think are certainly realistic and maybe a whole hell of a lot higher. I guess I'll say this. There are very few absolutes that you can talk about in finance. And I've learned in 34 years, maybe the only absolute I can give you is that bull markets go higher than anyone thinks possible. Look at the Dow. When I started, it was 2,100. and bear markets will fall further than anyone ever thinks possible. And I would look at the Nikkei, which was 40,000 in 1990, or pretty damn close to it. And it's just now getting back to where it was. I know it bettered it for a moment recently, but it's taken 34 years to do that. And it's still just barely there, if not just below it, at a period of time where interest rates in Japan have been zero bound forever. So even with 0% interest, you can't entice the public who was burned so badly to go back in to the Nikkei. And so I think when we look at gold and silver in the scheme of things, this is I think a massive shift, a once in a generation shift away from the dollar. And so, yeah, sky's the limit, I guess, but it won't be easy and it won't be smooth and it won't be just straight up because of the obvious ramifications of all of this. So you got the West hanging on, doing all they can to shake people from the bull. Bull wants to take as few people along for the ride as possible. But when you realize that, gold right now has replaced the euro in terms of the second largest asset held by central banks right now for the first time ever, 18% allocation to central bank holdings, if we believe those numbers, the writing is on the wall. Gold and silver are replacing many traditional assets along with other commodities too. As Holter and Alasdair says, this is about real commodities, no longer promises from countries that are bankrupt morally, socially, and actually. And I think that portrays for much higher prices in gold and silver, even than Bank of America or JP Morgan optimistically are telling us.
In the continuation of the episode, Alasdair Macleod shares his price prediction for gold and silver if his predictions pan out for 2024. Also, Schectman makes some significant remarks on the U.S. economy and what all this means for gold and silver.
Continue with a bullish view on the economy, or on stocks, on bonds, whatever, on the dollar, you could suddenly find that the whole thing gets undermined very, very quickly. And for those who, like us, understand that gold is actually the only way out of this credit risk, then, to sit in your hands and sort of say, well, I think it might come back a little bit. Well, it may well do. But I think you won't forgive yourself if these events start to come through quite rapidly and you haven't bought. So that I think is roughly where we are. There's a lot of risk out there, and that's not even the economic risk. I mean, the economic risk is still there, as we've just discussed. And on top of that, everybody expects interest rates to fall. If they do fall, they'll be manipulated down because when you get a contraction of credit, which is actually what's happening with the over-leveraged banking system, then the cost of credit, interest rates, rises, actually. So, and also you've got the US economy or the US government rather, is definitely in a debt trap. So you are going to see higher bond yields along the yield curve. And so the Fed actually isn't in control of interest rates any more than anyone else is. And I think another thing which we should know is that the only funding now that I think the Fed is doing is really as a result of the carry trade out of the yen. I mean, the money funds and the banks, I think, have put their liquidity into T-bills. And now it's up to hedge funds and others, to short the yen, take the proceeds and go and buy US Treasuries with it, because for the yield pickup. I mean, and you see the yen fall and all the rest of it. So that is vulnerable to a sudden bear squeeze, if you like, on these guys in the yen, which could come out of nowhere. I know it seems unlikely, but there are all these dangers. So I think these summer months, where in this country we sort of forget about stock markets, we go to Wimbledon instead.
Distorted. And remember, they told us originally there was no inflation, and then it was transitory. And well, they told us there'd be 4 rate hikes or decreases rather, for sure, the beginning of the year, and now maybe 1. And if they do that 1 towards the end of the year, it just reeks of it being politicized to keep the Democrats in office, to get that run up of the market prior to the election. But yeah, I think those days are long over. Like I was saying earlier, how do you pay these unfunded liabilities? Where does the money come from? You're creating $1 trillion in debt every single month. How is inflation only at 3%? Where is it holed up? Is it all in the equity markets? Is it in the treasury market? Where is it? And when it finally starts to rear its head in the real economy, it's impossible to say that inflation will get down to 2%. I can't believe it. I don't think if you go back and look at their numbers over the last 30 years, they've been at 2% more than once or twice. Most of the time, they're over 2%, even by their own flawed metrics. But yeah, I would agree. Zoltan Pozsar is a genius. And yeah, I don't think that we get inflation anywhere near 2%. And if they were really honest with their inflation numbers, it would be a whole hell of a lot higher. So if they do pivot and lower rates, it only reignites that inflation engine that is already higher than 3% for what they're trying to get us to believe.
What do you think of today's weekly recap? Did you enjoy the show? Share in the comments section if you agree with the 3 experts, and share your macroeconomic view on the BRICS currency situation. Thanks for watching now. Check this video right here because you'll love it. I see you on the other side.